All right, I've started the recording here. Let's go ahead and dive into some education this morning. Hope you guys are having an amazing day today. I want to talk to you guys a little bit about a little bit more on easy money concepts this morning and dive into it, okay? Everything in the market, everything it has a lot to do with patterns, okay? And a lot of your opportunities are going to come with patterns. And without looking at the PSI down here, if you just look at this, your eyes can easily see after the fact. You see this kind of pattern in here that's forming where the market did this, right? And then the pattern breaks and something different happens. It goes into a new pattern. But there's a pattern in here, okay? And when we're talking about trading and trading setups, okay, which we're going to have one here in a little bit potentially. When we're talking about trading setups and taking trades, a lot of times, whether you're scalping or you're intraday trading, your whole goal is to kind of just hit your target and walk away for the day. But it's not going to happen every single day, okay? And you have to know how to walk away. But when it comes to the technical side of taking high probability setups, you need to be waiting for high probability setups, okay? Whether you're using your indicators or your signals, or you're using your PSI down here and you're trading as an advanced trader, okay? So let's look at this move in here. I'm gonna hit the replay button. We're gonna watch because right now we're waiting for the price to come back up above the 50. But we're gonna take a look at this right in here, okay? And I am going to delete that right there. Now, if you were trading this morning from 4 a.m. until 6:22, and you were looking at this market and you're thinking to yourself, I see a little bit of a pattern, I would like to get in, especially after this initial part has occurred and you see this. Where would you be looking to get in? You'd be looking to get in on pullbacks. And where would be the ideal pullback? Well, the ideal pullback would be these two moves right here, right? Or this third move right here. So what you would do when you see this, and I'll even pull this back a little farther here. What you're looking to do, that's coming up. So in just a second here, we're gonna zoom into that. Okay, this would be a very short, simple video. The most obvious, easy way to trade a pattern is to look at the direction. This is up. Look at where the low was, and that gives you a clue down on the PSI where that happened. It happened from the 50 to the 40. So you draw up your little box, paint it blue, and when the price comes back into that level, that's the zone where you're going to want to strike from. Now, if you want, you can just trade it as soon as it comes back into the zone, or what you can do is you can wait until your PSI makes a V and is pointing upward, okay? So watch how this comes back down into the zone here. I'm gonna speed it up a little bit. Okay, here it comes, right here. See how it's in the zone? And right there, you've made a V. That's your buy entry. From there, market pushes up. Where is it bouncing from? It's been bouncing from up in here. You take your profit up in here, or based on the amount of ticks, or your first bearish candle up in here. You look at the waves and you go with the waves, okay? Market comes back down in again, makes another V. So once again, you could be entering in right here. Market comes up, you get profit again. Okay? Market comes back in again right there for another one, and you could take profit again within, this is on the 1 minute time frame. So in this wave, you could have caught this multiple times. Okay? If you wanted to, you could have drawn out a trend line, and you could see You have a trend line, which also, as every single time this comes down, it's bouncing. But all it is you look at that initial, you have to look for the waves, wait for the wave to form, look where the pullback is, and then now you have a pattern that you can go off of. And then when the pattern starts to break, market comes back down in. Instead of bouncing, it drops. Now you have a break of pattern right there. The move is done. Okay? Now you have something different happening and the pattern has changed. And now there's never a guarantee, but now your probability of success has shifted because something different is happening in the market and the pattern which had established has changed. So your mindset has to change in order to adapt to what the market conditions are doing. Okay, so let's fast forward now to a trade that's happening potentially right this second, where we've had a downshift, wave, downshift. The wave was to this zone here, and now we're getting a signal as well in this zone. If the market continues up past this, we would just get out. So we're going to take a sell in the market right now, okay? We're going to take a sell in the market. If the market continues to push up past this zone, you have a shift of pattern. Right now the pattern is here, here, and then we're looking for one more push to the downside. Okay? So we're also looking for that market to respect this little pattern we have going right here, right? We have a trend line from this same zone from here to here that you can begin to draw out, where you should see the market begin to drop from. You can see here where the market started was the same location. Started here in this zone. In fact, we'll get this shifted here. Okay. Started from here, so it dropped. Move starts from here, drops, comes back to here, drops, comes back to here. We're looking for another drop. If it doesn't do it, then we would just turn around. Okay, we would just get out of this trade. All right, put some easy money emojis in the chat if that makes sense to you guys. The zones and the patterns. All it is just patterns and zones here with the PSI. Okay, you're giving yourselves. You're waiting very patiently for the market to come back to the zone for you to strike. Okay? For the continuation of the pattern. Very good. Is that making sense for everybody? Good morning if you're just joining us, by the way. You guys can catch this recording later. All right, and you can see here now the market is dropping back down. So if you look, as this drops back down, we know, hey, here's our limit. We don't want to be going above this. We have a pattern here, okay? We've got a pattern in the market, and the market should not be going higher. It shouldn't be going higher. So guess where our stop loss would go? Because you need to practice the art of just getting out if it doesn't give you what you want, okay? So now at this point, once we leave the purple, once we get outside of the purple, guess where our stop loss is going to go? We're going to go to break even with our stop loss as we come back to the purple. You're now in a risk-free trade. You can't lose anything. And if the market decides to break pattern and go against you, you've given yourself a risk-free opportunity to make money. You can't lose anything. And now you win either way. You've got access to free money right now. So now we've come back down to the purple. I'm in a risk-free trade. I'm no longer risking anything. Okay? It's just like that. Just like that. The pattern comes up, does a little double test, drops. Little double test, drops. Little double test, drops. Right? We should see the same continuation of that. If it doesn't, the market conditions have changed. All right? So right now on this one, this is the third wave. So we're looking to get back down here to an equal low. Okay, we're looking to get to an equal low. There's no guarantee that we're going to get there. We're going to monitor and watch the behavior. You can see here this thing, when this thing pushed up, this one did get to there. When this thing shifted and didn't, there we go. So this already shifted back, stopped us out at break even, we're out. So we're not going to get that one. The pattern has shifted and now the market conditions are changing. This is now something different. You would no longer take this trade. Do you guys see that? That is a win. All right, that's good trading and it's good risk management, which is the name of the game. Your goal is to be here for as long as possible, and the only way that you're going to do that is to manage risk. So that one could have won, or it could have done this, and in this case, it did that. All right. You do not immediately enter again when this happens, because again, it's a break of the pattern. Pattern broke. Okay. Now, when we zoom out here in this particular pattern, we see that the market made a low, pushed up, made a low again, and then now potentially beginning to push up as it breaks this pattern, or it may go sideways, but it's finding a base here. So it is possible that the market could find support and actually push for higher highs. Okay? So you would wait for the patterns to form. You'd wait for the obvious easy money trades. You mark up your zone on the PSI and you execute, execute, execute. And when the trade goes against you and is no longer validating the pattern in the market, then you walk away and you patiently wait for another setup. And there will be days where you don't really get very many obvious setups in the market. And on those days, you may not even take a trade. And when you get to the point where you're okay in a day not taking a trade because you understand capital preservation, that is the day that you become a professional trader. All right. Hope you guys enjoyed this video on the Easy Money series. We'll see you in the next one.